for the kind invitation to participate in this seminar, and also for me it's an honor to share this panel with Professor Pistone. To get back to Marjoleine, I guess it's a good idea to cooperate more in the field of these kinds of research and seminars between administrative law and tax law, because I guess what we tax people often forget is that EU tax law in itself does not exist. It's more EU law applied to taxation, and as tax law indeed is administrative law, I guess there is a lot we can share, especially where it relates to the relation between sources of law, interpretational issues, procedural law, and exchange of information, like in this seminar. So I guess that's really important also for the future. My agenda for today is to start with a more general overview of the importance of international tax law and the role of the OECD, the Organization for Economic Cooperation and Development, on EU law in general, and the relation with domestic tax law issues. So I will not necessarily focus on the cases you summarized before, Marina, but give a more general overview on that, starting with the role of the OECD. And the OECD, it's something, I'll give the Netherlands as an example. There are a lot of problems that individual countries are facing in the field of taxation. But in the Netherlands, one of the more general remarks being made is it is not a good idea to solve everything on a unilateral basis, but it's better to get to a more global and international consensus for a solution. Of course, we can do that at EU level, but sometimes it's even preferred to do that at a global level. And the OECD is a good organization to discuss international tax law issues for that. And once that so what does the OECD then do? They, for instance, created model tax conventions for years, from the mid of the last century already up front. And a model tax convention, of course, in itself is nothing. You cannot appeal to a model tax convention in itself. It's more or less the basis for two countries when they want to create a bilateral tax treaty among them. In that treaty, the main rule is to allocate taxing rights, so to determine which country can actually is entitled to levy tax on a certain item of income. It contains definitions, but sometimes concepts and rules and terms are used in a tax treaty that are not specifically defined in the treaty itself. And for that, we also agreed on a commentary to that model tax convention. And in that commentary to the model tax convention, several concepts are explained more in a deeper way, so in a more fundamental way. And that's of importance also for this seminar. I will get back to that later. Beside that, besides creating a model tax convention that can be used in treaty negotiations, we also see that and that's happened more recently, that some tax issues need to be resolved at a global level. And for that, the OECD started its base erosion and profit shifting project. So how can we actually create rules either unilaterally or at a more global level, or by amending existing tax treaties to counter the erosion of the tax base? How can we counter the fact that in some by using certain jurisdictions or by using certain tax treaties, some countries just get a reduction in their tax revenues? And that was started with the OECD BEPS, base erosion profit shifting project, and evolved also further to the EU Pillar 1 and Pillar 2 discussion. And they're all OECD OECD results. So global consensus was reached. But then, of course, the question always is, how can we actually apply those rules? Now, sometimes it's easy. For some rules, we decided we amend the existing tax treaties, but most of the time, they require implementation in domestic law. And in order to make sure that in all EU member states, the OECD agreements are transposed in a more or less comparable way, the EU used its own legislative instruments to implement that. That's what we're about to see in the Pillar 1 and Pillar 2 discussion, but we already saw that for the OECD BEPS project in, for instance, the anti-tax avoidance directives we had. So within an EU context, what do we do in an EU context with all the OECD instruments? With the Model Tax Convention itself, we don't do that much, but other documents are transposed in the form of a directive, and we will see that later on when I'm going to discuss several examples. When I'm going to give some examples of that. But I said we don't use the Model Tax Convention in EU law itself, and that's actually true. But what we did do, and that's the topic actually of this of today's seminar, is we did borrow elements from the OECD Model Tax Convention to use them in an EU context. So we did that, for instance, for the concept of foreseeable relevance, but we also did that with concepts like beneficial ownership. All kinds of examples we have that a concept not even defined by the OECD are literally used in EU law instruments, in directives, and they are required to be transposed into domestic law as a consequence of that. And there, I guess, the discussion and the problem starts, because several concepts aren't even defined at OECD level. They're just copied into EU law instruments like directives, and we request them. We request the EU member states to transpose that into their domestic law as well, without giving any further guidance on how to interpret those concepts. And yeah, that's, I guess, the basis of the entire discussion. Interpretational differences between concepts from the OECD in EU law instruments and copied into domestic law. And the question then is, what is the role of the ECJ or the CJEU plays in that field? Because in the end, it's the Court of Justice that has its final say in interpretational issues. So how does the ECJ respond to that? And we see a somewhat sliding scale in the relevance that the ECJ gives to the OECD Model Tax Convention. And I'm taking that as an example because foreseeable relevance in principle originates in the OECD Model Tax Convention. Actually, it even comes from the exchange of information provision in the Model Tax Convention. And in the beginning, in cases like Geely, and I'm not going to discuss the cases in themselves because they're not interesting for this topic. But what you saw happening was that the ECJ there referred to the Model Tax Convention as an internationally accepted standard. So they actually thought, okay, it's relevant. For the case itself, it wasn't relevant because it was on allocation of taxing rights. It wasn't on interpretational issues, but they said it's an internationally accepted standard. So we think it's really relevant. But that's reduced over the years. So later on, they referred to the arm's length principle. That's also finding its basis in international tax law. It's recognized internationally. That's not as strong as a standard, and it's reflected in the Model Tax Convention. And later on, it was even only an inspiration, or it became. Yeah, you can use it as guidance from international tax practice. And in cases, the beginning of this century, the ECJ actually didn't refer to the OECD Model Tax Convention anymore, even in cases where it's specifically related to tax treaties. So you saw a little bit of a sliding scale. And then there were the Luxembourg cases on exchange of information, and there they actually had a really big chance to determine and to refer again to what is foreseeably relevant and what is the impact of the OECD Model Tax Convention. Because, as I said, the question is, what does foreseably relevant mean in the directive, directive on the exchange of information? But the concept itself was copied from the OECD Model Tax Convention that was actually a lot older. What happened in the case, and I will focus on what the OECD part was, but what happened in the case was actually that in answering the question, what is foreseably relevant, it's an interpretational question. And the ECJ started by saying foreseeably relevant is an autonomous EU law concept because it's included in a directive. So it's an autonomous concept. We can determine what it means. And then they said that they were just repeating what they did before. They were saying, okay, which interpretation methods do we have within the EU? Now we can do a textual analysis, or we can place the concept of foreseeably relevant in a certain context, or we take into account the aim and purpose of the concept. So what do we actually want to achieve by it? And they answered all those questions. And they then came to their conclusion what foreseably relevant should mean, and that's also being the topic of the later session. So I will not elaborate on that too much. But what lacked actually in that entire analysis was what was the role of the origin of the concept of foreseably relevant? Why not referring to what the OECD already did in its Model Tax Convention and in all of the commentaries? No, that in principle the ECJ decided what foreseably relevant was, referring to text, context, and aim and purpose. And only lastly, they said, okay, we can also see what it has to mean under the OECD Model Tax Convention, but it was almost superfluously. They only say the interpretation of the concept of foreseeably relevant corresponds with the interpretation that is given to the same concept in Article 26 of the Model Tax Convention and the commentary to the Model Tax Convention. So it's more or less a confirmation. Okay, what we decided based on text, context, and aim and purpose is in line with what we already have in an international context. And you can I guess see that in different ways. You can take different angles on that approach. On the one hand, of course, it is included in EU law, so I can imagine that the court actually in the end would say, no, it's an EU concept. We're going to decide what that concept means, and we do not want to be dependent on what other international organizations where we do not have any influence on say on that concept. That's an approach, but you can also say, okay, but at least refer to the Model Tax Convention and its commentaries for its historic value. And moreover, because almost all EU member states also are members of the OECD. I guess there are still only 2 countries that are not OECD members. So there's also a lot of international experience with the OECD Model Tax Convention. So it's also, I think, interesting to take that into account. From an interpretive perspective, there's can be a discussion, because what the ECJ did not really accept taking into account historic documents. They only started with that at a rather late stage. Moreover, most familiar in 2 Brexit cases. What is important then to note, I guess, is that when they more or less superfluously refer to the OECD Model Tax Convention, they do take a dynamic approach. So they say, okay, but it's in line, what we already decided is in line with what the OECD said, also taking into account the 2012 OECD commentary, while the directive is already from 2011. So they apply a dynamic interpretation. Is that really strange? I would prefer that. From a Dutch perspective, we're used to a more dynamic interpretation. But the strange thing is that where it relates to the interpretation of EU law, the ECJ tends to take a more static interpretation, as we saw in, for instance, the Gaz de France case. Then there is, I guess, we need to have, if it where it relates to the exchange of information, we need to take into consideration that we're now very familiar with automatic exchange of information and much information. Actually, it didn't start like that. So in 1977, the OECD started with its idea of exchange of information in the Model Tax Convention, but there were three types, three means by which information could be exchanged. It was either upon request, or automatic, or as a last resort, you can just send information spontaneously to another tax authority. At least your tax authority could do that. Most of the time, the most common way was by request. There was not that much that was exchanged automatically, but we see a shift in that. So after the financial crisis in 2008, we see that the OECD starts to that the US initiated its FATCA rules. Not going into that, and at OECD level, the comparable common reporting standards were introduced. And in 2015, the final reports on the OECD BEPS actions were published, and they also, to some extent, relate to exchange of information, because Action 5 relates to the publication or the exchange of information on information relating to tax rulings. Action 12 relates to mandatory disclosure rules. That is really important in the EU now as well, also from an interpretive perspective. And Action 13 on country-by-country reporting. And all those elements, in the end, were, of course, again, introduced in EU law as well, because the European Union Commission actually said, let's create directives to implement that in our domestic law.
Jasper,
yeah,
you have some more minutes. If you can start wrapping up, I would appreciate that.
Yeah, I will.
Thank you.
I will. Yeah, I will make some smaller remarks. This is an entire. I guess the presentation will be sent to everyone, so you can see this. This is how it evolved within the EU. In the EU, we also said, let's exchange information more automatically, and that's what happened. This is about that, and within that, I want to make a few examples in relation to the interpretation of DAC 6. So that relates to mandatory disclosure rules. So intermediaries that have advised on potentially aggressive arrangements need to inform the tax authorities, even for situations where those arrangements are not actually put into effect. And what we see happening here is this is actually related to the OECD BEPS project. So in Action 12, OECD Action 12, it already related to mandatory disclosure rules. And what we saw before, there was a decision at global level. It's implemented in the EU by means of DAC 6, and now it needs to be interpreted or implemented. It was already implemented in domestic tax law. But for interpretative matters, the directive itself directly refers to the OECD project. So when you need to discuss on how to interpret certain concepts in DAC 6, you can also take into account what the OECD mentioned in its BEPS Action 12 document. That is slightly different where it relates to foreseeably relevant, because for foreseeably relevant, that was included in the 2011 Exchange of Information Directive. There is no direct reference being made to the concept as used in the OECD Model Tax Convention. I'm not saying that we cannot use the OECD Model Tax Convention, but I prefer the new way by the European Commission, by also directly referring to the OECD model or the OECD's documents, at least for interpretive purposes. Due to the time, I'll skip my entire part on interpretation, because there are still a lot on interpretational issues in relation to DAC 6. There's one remark I do want to make, and that's on this one. What we did see happening is that in the past, exchange of information was started as exchange of information upon request. We now see a lot more information being exchanged automatically among the tax authorities. In principle, by the way, I think that is a good thing. We do, however, see that more and more information is exchanged automatically, and there's still more to come. So on information on online platforms, on cryptocurrencies, we're now going to discuss for the future to exchange information on shell entities, on potentially the publication of the effective tax rate of entities. And I think in principle, it's a good idea, but I do want to point, and that's my last remark, Marina. I do want to point to what some researchers and what the European Court of Auditors actually indicated. It is fine. It's good to have more information, but make sure that the information, one, is correct, but also use that information, because what we see happen, what they saw happening right now is that, yes, there is very much information being exchanged, but it's generally underused. And that also undermines the willingness to actually report all the information that is required, because the current feeling right now, and that's me paraphrasing the Court of Auditors, is that we create a lot of haystacks, but we cannot find the needle in that haystack anymore. So I guess that's something we need to look out for towards the future, how to solve that, to at least make use of all the information that we have collected. And I'll stick to that.
Perfect. Thank you very much, Jasper, for this interesting presentation. I actually have already one question, but I will keep it for the end. So now, please, Pasquale, is your